for our hot picks section, and technology has been all the rage for the last decade, but is the recent sell-off a sign of things that perhaps sentiment is changing or a buying opportunity? Our next guest is looking at valuations of a few well-known technology companies and sees some potential long-term opportunity. Benjamin Klein is Senior Portfolio Manager at Baskin Wealth Management. Nice to see you.
Thanks for having me.
So this, this period in the market cycle, I mean, people are definitely jittery. They're already starting to feel jittery about technology companies. Now they look at tariffs and the worry surrounding that, and they sell even more. And you say what?
We feel that, in the short term, anything can happen with tariffs, with what have you. Our view is medium and long term. These companies, the ones I'm going to talk about today, are amazing performers, wonderful fundamentals, still growing earnings at amazing rates, and available in what we see as very attractive valuations.
So what are the kinds of things you're looking for? Just the ability for companies to deliver on the profit side at the end of the day more than anything else?
Yeah, and paired with an attractive valuation. We think that if you can get attractive growth rate that you expect to continue, consistent customer base, sticky customer base, and potential upside from various catalysts and not pay too much, we think that's an attractive proposition.
Okay, let's start with Alphabet, which is the parent company of Google, and they've got search, they've got now this push into AI, and they got Waymo and self-driving, and YouTube and video, cloud. They got a lot of stuff under the hood. What do you like about the business and the valuation?
So that's actually part of the reason we think it's so attractive. So a major concern kind of across the three companies I'm going to talk about, and really tech in general, is are these companies spending too much on capital expenditure in terms of investments in AI and large language models and everything else? Our view is, in general, that misses the forest for the trees a little bit. I think it's a little bit myopic. Just in general, these companies still, as I say, amazing performers, growing their profits year over year. And maybe most importantly, in terms of profits, they're generating enough profits not just to pay for the capital expenditure, but also to pay for capital returns at the same time. And that's not even to mention, there's the possibility all this capital expenditure is absolutely the right thing to do. These companies, I think to some extent have proven they know what they're doing. And even if all this capital expenditure isn't just needed for AI, as you say, these companies have their own other products. They can use the compute power for different things like Waymo, like YouTube. YouTube, we think, is going to be a major beneficiary from AI, whether it's new content or just helping existing creators make more content, make it more efficiently. They're rolling out a lot of tools to help existing creators use AI to improve their products. And in terms of valuation, you're paying a below market multiple for continued double-digit growth rates. We think that's medium term and long term still a great proposition.
Okay, let's compare Alphabet to Meta, the parent of Facebook.
Mm-hmm. So of course you're talking about the three main products. You got your WhatsApp, Instagram, and Facebook. They benefit in kind of two ways from AI. Number one is driving engagement with their products. That helps them on one side. It also improves advertising revenues. They're already seeing some benefit from AI in improving video relevance for their users, which is great. We think that there's a potential upside in terms of just continuing to drive engagement, continuing to drive growth. Instagram Reels, we think, is a huge potential catalyst for them. Obviously, with TikTok, a lot of unknowns there, but they're potential beneficiaries if that continues and the ban holds up. Although, of course, that's unknown. They're rolling out more tools to help Instagram creators, and they're launching Instagram Reels as a standalone product, which is a big benefit for them. And again, in terms of valuation, you're paying basically a market multiple, maybe a little bit less today, but you're paying a market multiple for double-digit growth rates and really a wonderful, sticky business.
Okay, so we've gone through Meta and we've gone through Alphabet, and then your third is Microsoft, very well-known company.
Yep.
What is it about the Microsoft business and valuation that attracts your attention?
So maybe not the sexiest pick ever, but we think it's pretty simple thesis. We think they're going to be the main beneficiaries of implementing AI on the enterprise side. So right now, that's rolling out Copilot into things like Office Suite, Word, Excel, PowerPoint, Microsoft Dynamics. They're already using AI to improve their pricing, drive Office subscriptions, and we think that that's a significant driver going forward. One concern for them, specifically for Microsoft, is the growth of Microsoft Azure, which slowed down a little bit last quarter. In our view, Number one, yes, investors are always looking for performance relative to expectations. It did grow a little bit more slowly than people were hoping for. It still grew 31% year over year. In our view, that's still pretty good, even if the market expected a little bit better. And at the same time, when it comes to Microsoft Azure, we think that this is going to be a continued huge, major catalyst for them. Another maybe underappreciated side, one more thing, is their PC and game segment, which has still had an overhang from COVID. We think there's a potential for that to return to growth. And again, in terms of valuations, like the other two, you're only paying about 27, 28 times earnings for an incredible business.
Well, it's a reminder, all these companies have a lot under the hood. Last 15 seconds here. When you invest in a company, like what's your investment time frame here? Are you buying these things for the long term?
Yeah, when we buy a company, the idea is we're going to own it for 5, 10, 20 plus years. We have still a handful of companies that our clients own in 2000, and that's the goal. Obviously, things change. You get things right, you get things wrong, and over time, the thesis changes. But our goal is we're thinking about decades.
Okay, Benjamin, thanks very much for breaking it down. So.